When you look at a market chart, it's easy to see just a bunch of random squiggles and lines. But what if I told you they're actually telling a story? A story with clues, a little bit of suspense, and yeah, a really dramatic ending. Well, today we're going to decode that story. Let's get into it.
Okay, so let's start at the end, with the grand finale. Take a look at this. After a pretty steady climb, the price just falls off a cliff. I mean, that is a massive, jaw-dropping move. For most people, this would feel like it came out of nowhere, a complete bolt from the blue. But did it?
That's the million-dollar question, isn't it? How could anyone possibly have predicted a drop like that? Well, that's exactly what we're going to unpack right now. We're going to play detective, dust for some fingerprints, and follow the trail of evidence.
Here's the thing. The market almost always leads behind a trail of breadcrumbs before it makes a big move. You just have to think of it like a detective story. Our job together is to find and piece together all the clues that are hidden in plain sight right here on these charts.
All right, our investigation begins now. And the first thing we need to do is gather some evidence by taking a look at the big picture.
Any good investigation starts by surveying the whole scene, right? In the world of trading, that means starting with the higher time frames, like the daily chart. This gives us the overall context, the broad strokes of the story, before we start zooming in on all the tiny details.
And boom, here is our first major clue. See this big kind of M-shaped formation? The one marked out by the points X, A, B, C, and D? That's called an anti-Cypher pattern. Now don't worry about the name or the geometry. Just recognize that when you see this shape complete near a peak, it's a huge warning sign that the trend might be getting ready to turn around.
So let's just quickly put a definition on that. An anti-Cypher is just a specific type of pattern that basically flags a potential reversal zone. Think of it as using price math to find spots where a trend is probably running out of gas. That's clue number 1 in our case file.
And next up, we find another piece of evidence. Notice these two upward moves, the leg from A to B and the leg from C to D. See how they're almost identical in length? This is a classic pattern called AB equals CD. You can think of it like a rhythm. When the second beat perfectly matches the first, it often means the song is about to end. This symmetry, that's our second clue.
So what's that really mean? Well, the AB equals CD is one of the most basic, fundamental patterns out there. It just suggests that once the market has moved the same distance for a second time, the momentum is often completely spent. This symmetry is finished, and the market is primed for a potential change in direction.
And this brings us to our third clue from the big picture. All of this action we've been looking at, it's all happening inside this giant triangle pattern, which some traders call a tribo. See how the price is just getting squeezed tighter and tighter between those two lines? That shows a period of consolidation. Energy is just building up, kind of like coiling a spring right before you let it go.
Okay, let's pause. We now have 3 major clues on our daily chart, the anti-Cypher, the AB equals CD, and the tribo. And they're all pointing to the exact same conclusion. This upward move is in serious trouble. The case is getting really strong, but we're not quite there yet. We need more confirmation.
And to get that confirmation, we've got to pull out the magnifying glass. It's time to go from the big picture to the nitty-gritty details.
So now we're shifting our focus down to the hourly chart. If our big picture theory is correct, we should be able to find smaller, more immediate clues right here that back up our case and tell us that a big move could be just around the corner.
And what do you know? Look at that. It's the same tribo pattern we saw on the daily chart, but it's repeating itself here on the hourly chart, right at the very peak of the move. This is what's known as a fractal pattern, and it's an incredibly powerful piece of confirming evidence. The market is coiling that spring again, but on a smaller scale, right before the big show.
And hey, just in case we needed one more little nudge, we get another pattern, an anti-crab, forming right here on the hourly chart. But what really matters isn't the fancy name, it's the location. This smaller pattern is flagging the exact same price level as our bigger clues from the daily chart. I mean, when different patterns all point to the very same spot, that's a signal you can't ignore.
And this, right here, is probably the most important lesson from our whole investigation. The daily chart told us a bearish story was brewing. The hourly chart came in and confirmed that story with its own set of clues. When you get that kind of alignment, that kind of agreement across different time frames, well, it's a very high probability signal that something big is about to happen.
So, we've got our motive, market exhaustion. And we have our evidence, and it is stacked high. Now, we are just waiting for one last thing, the trigger. The one single event that confirms our entire theory and unleashes the move we've been waiting for. And there it is, the smoking gun. You see this rising trend line that had been holding the price up? The second the price breaks and closes below that line, that's it. That's the trigger. That's the final confirmation that the sellers have wrestled back control and the floor has just completely given out.
In trading, we call this a breakdown. It's just a technical term for that exact moment an asset's price smashes through a key support level. It's really the point of no return. It signals that the downtrend we've been anticipating is officially underway.
And what happens after you pull the trigger? You get the bearish expansion. This is the result of all that pent-up, coiled-up energy finally being released. The price just plummets, exactly like the evidence suggested it would. And just like that, the mystery of the sudden drop is solved.
So let's just take one step back and lay out the entire case, from start to finish. You see, it wasn't one single thing that gave it away, but a totally logical sequence of events that let us crack the code.
Here's the aha moment all laid out. First, the big picture daily patterns set the bearish stage. Then, second, the smaller hourly patterns came in and confirmed the theory. Third, the breakdown of that critical support level acted as the final trigger. And finally, fourth, the bearish expansion followed right on cue. It was just a clear, logical progression from one clue to the next.
And that's really the heart of it, isn't it? That dramatic plunge wasn't random. It wasn't a surprise at all. The story was being written, candle by candle, right there on the screen for anyone to see. The outcome was simply the logical conclusion to a story that had been building for days.
Which really just leaves us with one last, fascinating question. Now that you know how to look for the clues and the patterns and the triggers, what other stories are the charts telling you right now?